The broadcast is now starting. All attendees are in listen-only mode.
Hello traders, good morning, noon, afternoon. How are you today? Okay, can you hear me, guys? Some issues with the microphone. And the screen? The screen is not there yet, right? Where is that? I'm good, thank you very much. Thank you very much. Everything is okay. Just trying to figure out. Oh. Yep, okay. Now it should be good. So, guys, how are you? We have the volatility there and things are moving. We have many updates to go over for today, as the market, after the CPI and the retail sales, we can see the momentum is back, and is back big time. The biggest question is it back or is it just, let's say, erasing some short-term stop losses? And that's what we are going to discuss about. So let's start, go over the report. Let's start with the most recent ones, which basically got interesting. Pound dollar after the triple cycle here. The triple cycle down, we are still looking to sell the rallies. The rallies that ideally should take us towards the 38 to 50% Fibonacci retrace are basically two waves to the upside, followed by bearish divergence, and we can go and make a sell. The two waves have to be on the 4-hour chart or the 1-hour chart. And now I want to challenge you here with something, and I want to see how you deal with that. Just remove that. This is the daily chart, the 4-hour chart. That's the last two candles we had on the down move. Okay, here on this down move, that's the last two candles, correct? And now I want to challenge you here on the 1-hour chart when we go down, and ask you the question here: is this a valid trendline breakout? Yes or no? Because that's a double wave on the 1-hour chart, no doubts, right? That's a double wave on the 1-hour chart, not the 4-hour chart, on the 1-hour chart. Is that valid, yes or no? Many yeses, many no's. Why no? I'm interested to say why no. I'm interested to hear why no. It's a bit of challenge here, right? Rare situation that normally doesn't happen. The biggest question: what does it represent? Don, you want to try, for example? News direction, right? Okay. Basically, the idea is very simple. In order for the correction after this triple cycle, in order for this correction to the upside to be valid, it has to break this high. Bottom line. Otherwise, none of the corrections is a real correction. Agree with me? And it doesn't matter where. because this is a triple cycle 4-hour chart. In order for that to be corrected, it has to break this high. Fact. Saying that, we can see that the 1-hour chart trend line, and that's why I start with that, because it's a real challenge here. Saying that means that the 1-hour chart trend line is wrong. This trend line is wrong, because this high did not break the 4-hour chart two-wave candle. So the 4-hour chart did not correct yet. Right? Understand here, guys? But, and here comes the but, this is still a double wave by itself on the 1-hour chart, followed by divergence, right? So can we trade the short here? Yes or no? Yes, we can. We can go to the lower time frames and see what kind of confirmation do we have here. And that was a 1-hour chart, and on the breakdown, that was the last available trend line to go as long as this top holds. But it doesn't have to do anything with the 4-hour chart correction. Do you see the see the complex here, guys? And I say complex because this is, again, this is very, very rare conditions, which normally never happens, but in that case it did happen. So what we have on the 1-hour chart is a double wave correction, which could be traded, definitely could be traded, because our daily direction is bearish. And in order to rejoin from the best way, this is the last available trend line for us to trade it to the downside. Right? But this trend line, the one that we want to correct the triple cycle from the 4-hour chart, is not correct, because it did not break the high of the 4-hour chart. Very simple. Very simple. The cycle is coming from here, right? So we have to reach these cycle levels. And the correction the correction up did not reach even the 38.2 of the triple cycle, which again means that might be even not enough. Clear, guys? This is a bit of complex here, that's why I wanted to show it to you, and I want you to understand the logic. The logic is very simple. This is the 4-hour chart cycle, triple cycle. 1, 2, 3, 4, 5, 6. 1, 2, 3. In order for that to be corrected, the last two candles rules have to be broken, yes or no? The last two candles high, sorry, have to be broken, yes or no? Yes. Was it broken at this stage? No. Who did pay attention to that? Let's admit it. Who pay attention to that? And I don't blame you, because this is very, 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 very rare situation. That's why I wanted to show it to you, so you remember the same logic. The logic did not change. The two candles rules have to be respected everywhere. Well, for safety, let's say. Since it didn't happen, we don't have yet long-term continuation. What we do have here is the 1-hour chart two-wave cycle that could be traded. Well, until we have the divergence against us, and here we got the divergence against us. It's it's a bullish hidden one. Okay, that's all basically. So the intraday trade could provide here an opportunity. Would I trade it? No, because of the reason I mentioned before, of the 4-hour chart. Is that correct? Yes. Okay, and the 1-hour chart trend line? No, it's not correct. Now let's go to the euro. So basically, let's finish with the pound dollar. So we're still after long-term sales, but the short-term corrections up is still in play. And since this is a triple cycle, we can get the corrections up to the corrective area right here. So it still has a room. Okay. Now, in order to join the 4-hour chart cycle and the daily direction down after the triple double from the 4-hour chart, this is the current trend line developing. Could that be and develop differently? Something like that? Yes, it could. And then we will adjust the trend line. At this stage, that's the only legs we have. Okay? That's for the pound dollar. So the direction does not change for us. Sell the rallies. Freezing image. Hold on. Why is that? Can you see it now? Is it better now? Maybe something there's a connection. Can you see my screen now, guys? Yes. No, only one no. So Costas, I think it's not on my side. Sorry, it's on your side. Everyone says yes. Okay. So the current one again. The current one that we have is this for the pound dollar, and the ideal correction should take us back to the 50%. So it's well about 100 pips higher. So the short term remains still buys. Long term still sells. Euro dollar. I remind you, we have nothing for the long term, which means long term is still bullish. For the short term, we had the triple cycle down, the special cycle down. And we wanted the two waves up to be broken to the upside. That was the two waves, got us the 161.8. Simply amazing. And then we got this breakout. Is that good for sell, yes or no? The two candles, of course, of the 4-hour charts are broken a long time ago. Is that a good breakout, yes or no? No. Why no? Risk reward, beautiful. Beautiful. That's what I expected to hear. No due to the risk reward. Check out the entry. The stop loss here is 100 points. 100 points would not give us anything profitable on the short term. How can we risk 100 pips on the short term? Doesn't make any logic, right? It turns out to be not short term, it turns out to be long term risk. What do we do in that cases? We are waiting for two waves retraces and another breakout. Did we get it? No. Correct? Not yet. It was one straight move up, which, if you ask my point of view, I have no idea why, because the CPI was ultra bullish in the US, and yet the dollar is losing the momentum. But well, I see that only like the clearance before another rate hike. That's all. But that's the fact. One move up, and that's where the euro dollar still holds its long-term direction to the upside. Okay, still holds the long-term direction to the upside. The invalidation for the longs would be this trend line, because this is the current trend line that still could be respected by the by the short term. That's all. So as long as we are above this trend line, the pressure is yet bullish according to the long-term cycle. Okay, that's for the euro dollar. Wanted to show you that, guys. So why do I show you the pound dollar and the euro dollar? The first thing, because the pound dollar was not correct, and I showed you why. The euro dollar was correct, but not tradable. Why? Because of this. This is not normal risk. Not a normal risk. for a short-term trade. Okay? Very simple. And since we are going against the daily, against the weekly, is that smart? Of course not. So the good saying of hold your horses has a great meaning here. The next one that we were spying, that was the dollar franc for short-term buys, and this one was very beautiful setup. Well, it finished on break even, but it was simply beautiful. We wanted two waves down, and the last trend line that was broken was right here. That's all. That's the entry. That's the stop loss. That's the one-to-one, a bit more. Why this is stop loss? Because this is the last low available according to two candles rules. This is the last low according to two candles rules. So this is the stop loss. That's where it get us break even. Well, we move to break even after one-to-one risk reward, and after we got a bearish hidden divergence. And that's all. Game over. Costas, I just explained. Because this is where your last two candles rule was activated. Here. Is this low correct? According to two candles rules. That's the last two candles rules. This is lower. So is this low correct? Yes? That's all. But even if you protect here, you still get yourself the opposite signs against you, bearish hidden divergence, which means move to break even. This trade can't profit. This trade cannot profit, and that's why we are moving into break even here. And this one would close to break even. But the question is, what's next? The way it looks right now, we are back to the long-term direction, which is bearish. Why? Because if this low doesn't hold, the two-wave correction now is much, much deeper than any acceptable of the Fibonacci retraces level, which means game over. Dollar franc sells for the longer term is back on track. We wanted buy the short term. It worked perfectly for us here the previous week. It did not work out this morning. It finished break even. So game over. We're back to the sales long term. Okay? Why this is bearish hidden and not convergence? How it's one against another? Why it can be both? As long as it is below this high, this is a bearish hidden. Why it's interacting each other? Yes, it is a convergence, so what? If it's a convergence, then you need two waves retrace and breakout. Did you get them? No. So how it's interacting each other, I'm not sure I understand. It doesn't change the fact that you have a bearish divergence against you. You still have to protect yourself. Why it has to intervene each other? It doesn't. It doesn't at all. Yes, it is convergence technically, but it's a bearish hidden from the higher high. Okay. Well, that's a good question. What is the logic of the dollar to get weaker after such a CPI, right? No logic. And that's why I always say, don't look for logic in the news. Does not exist. Does not exist. News create noises. For the long term, that's what I suspect to happen here. For the long term, this CPI would make the impact, which means there is a good chance we are going here to clear these levels and then the CPI impact takes in place. Very, very big chance it's gonna happen. There is no logic why the CPI would be so good, but we're gonna go still higher. Maybe just the expectations were behind the scenes, yeah, not the official. Behind the scenes, maybe the expectation were much higher. That's why. So they kind of got disappointed. Maybe that's the only reason that could be, but we never know that. We never know that because we don't know the real numbers of the big guys. What we know is the simple prediction accepted by analysts. That's all. So that's why I always say don't look for logic in something that is simply not logical. Okay. Okay, few more updates. OZ versus the Kiwi. We wanted to go for buys as long as this low holds. So we were looking for 2 waves down. Never got the 2 waves down because none of the corrections provided the 2 candles rule, and the low was broken, which means our plans to look for buys become irrelevant, which means the OZ Kiwi currently is back to neutral. Why not sell? Because according to the higher time frames, we still have all the reasons for buys, and I'm talking about the special cycle from the monthly. So we let this correction go and make it complete its job. It could be anything for a duplication, which means the zone of 106.50, and against weekly cycle and the monthly cycle, I am not going against, looking for the next opportunity, which currently is not there. So OZ Kiwi is back to neutral. Okay, Euro Pound. We got ourselves the bearish alert. Where is our alert? We wanted to see it going close to 0.8940, and we got it, well, slightly lower, but we got it almost there, right here. Missing it a bit. The divergence is in play. The 4-hour chart duplication of the second cycle is in play. And the 1-hour chart cycle accordingly created for us a false break and a convergence. I have a question for you guys. Why, in that case, 1 false break and convergence is enough? Why don't we need 2? Why 1 convergence and false break is enough? Who can help me out here? Exactly, because we are on the direction for the higher time frames. Beautiful. That's the answer I was looking for. We are with the daily, we are with the weekly, right? Perfect. That's the answer I was looking for. Thank you very much. So that's all. We got the convergence, which means Euro Pound is back to bearish. Every retrace down is a sell. Target number retrace up, sorry, is a sell. How do you enter with the strategies you trade? This is always the same. It doesn't change. You get a direction, you trade it with your strategies. So the first target for that would be the triple cycle of the 1-hour chart. This is the first place, 0.8825. And the longer targets, of course, are open because if the weekly cycle is about to begin, we have some heavy stuff there. I would keep an eye here on the 50% of the 4-hour chart, which is 0.8080 as well. And according to daily and weekly, to the downside, it's completely open. So if this is the top, then we have a potential here for some monster to be developed. The invalidation for the sells is here. Okay. Ken, that's a good question. What should we do with 4-hour or daily trades during the news? Nothing. The news don't change the daily or weekly cycles. Nothing. The only thing news do is the noise for the short term. For long term, you have your cycles, you have your levels. Nothing change. Okay, so that's all here about that. Okay, so that's the update of the euro pound, guys. This one became bearish. Now Aussie dollar still bullish for the short term mainly currently, as long as this low holds. Do we have any reasons for buy? Not really. Not really. Not two candles. Not two waves down. Nothing basically. That was the triple, so we wanted it to go back to the 50. We never got it there in two waves. Nothing to do with Aussie dollar, simply not tradable. Euro Aussie is a perfect one, and this is an important update, guys. Euro Aussie, we were bullish yesterday. Euro Aussie, we got this trend line activated with a bullish hidden divergence here, right? So the Euro Aussie got the 1 to 2 risk reward intraday. Boom. Paid. And the biggest question, what's next? So my answer is simple. Even though we don't have signs to switch to the long term yet, we do deal with second false break. We do deal with bearish divergence. We do deal with a special cycle, which means enough with the longs, not yet shorts. Okay, which means we are neutral. We were long, we enjoyed the longs during the week. Now, game is over. For your question, Kostas, do we have the two candles rule applied? Of course. That's where it crossed down. That's where it crossed to the upside here with this high, right? This place. This is the bullish hidden on the 1 hour chart. So your entry could be on the lower time frame as well. Okay, that's all. So that's your entry, basically. That's where you got a new low, right here. And that's where you got your trend line. 1, 2, 3, and here we got the breakout 4. Kind of a range on the 1 hour chart. You mean this one, Tal? This one? All this place? Yes, it is. It is a range. I wouldn't deal with that at this stage because a daily might easily go to the 160 and at the same time might start to create lower lows. Currently we have nothing that we can rely on, and on the same time we have false breaks, 2 false breaks and the divergences, end of cycles. I say enough with the longs. This week provided enough opportunities to go long there, so I think these are exactly the conditions where we should stop. We're simply very close to the top of the daily chart. Second false break. All the divergences are there. No reason for sells, but is that really good to trade longs at these conditions? From my point of view, no. And the longs we've had during the week were much better than it looks right now. Much clearer. Now it's obviously not. This is kind of V patterns here, so avoid. Okay, next one which I want to update, pound versus the CAD. We are completely in both. The pressure there is still bullish as explained yesterday, both for the short term. The pressure here is still bullish according to the 4 hour chart last divergence. That was the bullish hidden. We don't have any divergence against us on the 4 hour chart yet. So basically, as long as this low holds, pound CAD main pressure to the upside yet. So 2 waves down, we have the buys. We have the 1 hour chart bullish hidden divergence as well. And the 15 minutes, well, that's a trend line. I don't like this risk reward. It's too big. for intraday trade. Look this out, guys. Check this out. You see that? That's 80 pips. Too big for intraday trade. So nothing to enjoy from the pound CAD too much here yet. Pound Aussie. Pound Aussie, we want to go sells, and we have the format right now. Triple, and here comes the double. So this is the current trend line. It might go and get improved, of course, later on. But currently this is the trend line with these lows. Breaking below that would give us the reasons for the sells looking. Okay. Pound Aussie, we are sells. This is the invalidation. Almost the 180. Okay. Goodbye, Nuno. And Nuno, if you have any questions, we'll continue in the groups. Okay. Take care. This one still no action. Hold on. Where is my next pair? Where is my... Oh, Euro franc, a question I have been asked about as well here. The Euro franc, for the long term, we still want to go sells. For the short, we want to for short we can go for buys. Why? Because we do have a bullish divergence on a daily, so the two waves up have to be the 4-hour or the daily by itself. Do we have two waves up on the 4-hour chart followed by divergence? No, not really. Which means the short-term corrections to the upside are still in play. Okay, and I want to remind you, that's the last two candles of the 4-hour chart. They have to be broken before we even consider long-term sells. All the sells that could be on these little corrections are short-term, intraday. Nothing yet for the long term. Okay, guys? Nothing yet for the long term. Nothing. It's not valid. So, yes, the short-term rallies are still acceptable. EuroCAD you want? EuroCAD is still bullish. EuroCAD, no signs for nothing. No two candles rules, no false breaks, no lower lows, no three waves down, nothing. Bullish. I don't see any reason to avoid this one. EuroCAD still unchanged. Okay. We do have the divergence against, which means the 4-hour chart have to be there. You got here a bullish hidden divergence on the 1-hour chart. We got the two waves against the 4-hour chart. Okay, let's make a step. 4-hour chart bearish divergence, which means we need the retraces to be where? Or the 4-hour and the 1-hour. Correct? Beautiful. 4-hour we don't have two waves. Right? So only 1 hour. The 4-hour, in order to be corrected, have to break these two candles. Did it? No. Exactly. It didn't break, right? So therefore we don't have the correction in play. So what we can do is the 1-hour chart two waves. In order to do that, you must make sure that you have the divergence in order to continue with the trend. Do you have the divergence to continue with the trend? Yes. And here is where you need to go down and find yourself the trend line to trade. Do we have anything here in trend line to trade? No. This trend line belongs to the 1-hour chart, and we know it's not valid because of the 4-hour chart two candles rule were not broken. So no action for EuroCAD here. Is that okay, Tal? This is the two candles of the 4-hour chart that must be broken in order for your correction in here to be valid. Since it's not, we have nothing to trade currently. But the direction remains bullish. Okay? Okay. Swiss yen, well, Swiss yen I don't deal with. Not at this stage. Swiss yen I don't like at all the way it looks. I don't think anything, at least from my point of view, clear there, so I don't know. Maybe only longs for Swiss yen due to the last divergence. We have a trend line, bullish hidden divergence here. So on the 4-hour chart, that there has to be a regular divergence, which we have. That's a regular turning to be a fake convergence. So this is the place where you can drop lower and ask yourself the question, do you have a cycle there, false breaks, etc.? The answer is yes. You have the cycle, you have a false break, you are building up the second false break, so the answer is yes. If we break the high, 1, 2, breakout, and you have the longs. That's the only thing I see for the short term. Who was it? Danilo. That's the only thing I see valid for short term. For long term, I really have no picture though. Really no picture. Oh, New Zealand. New Zealandian is a good one, guys. New Zealandian is perfect one because we want to go sell. Now let me ask you this question. New Zealand dollar looked like we have corrections there everywhere, valid and ready for basically for sales, right? The only place where we got the 2 candles rule activated was 1, 2, 3, and that was 4. Is that a correct trend line? Who can tell me here? This one. Is that a correct trend line? Yes or no? Who can tell me? Enlarge, enlarge. Let's enlarge. Is that a correct trend line? Yes or no? We have exactly. Beautiful. The answer is no. Why no? Kostas, you are right. Who else can try here? No divergence. Perfect. Thank you very much. Where do you see the divergence, guys? How do you know this move is over? Where is the divergence here? There is nothing. No divergence. Therefore, no, it's not fake convergence. Fake convergence must come after regular divergence, which you didn't have. Okay, so here you go. Is that a good breakout then? Of course not. What is the trend line that we want to follow for sales to be activated? Currently, this one. Do we have the divergence here completed? No. So for New Zealandian dollar, there is no action. As simple as that. With all the wish on earth we might have to go and trade it. Okay? No rushing. Dollar yen, no problem. Dollar yen, we were bearish yesterday, and we said as long as we don't have, as long as we don't have the signs to go longs, we are bearish, which means we can go and sell every single retrace. Do we have any retrace on the 1-hour chart? No, we don't. Do we have any retrace on the 15-minute charts? No, we don't. Can we trade it? No, we don't. We don't have anything for the sales done currently. Do we have a buy already? No, we don't. Why would we? Well, yes, we have the level dancing around 161.8, no doubts. But do we have the fallbacks and convergence on the 4-hour chart? No. Do we have fallbacks and convergence on the 1-hour chart? No. Well, this is a false break, and that might be another one. What do we need to see? The break of this high. Once we get it, we need 2 waves retrace and breakout. Once it's completed, we have the long. As long as it did not complete, we have nothing to work with. Okay? Very simple. OZN also bearish. I don't see anything there on the daily or the weekly stopping that. 4-hour chart has a special. Let's see what we have here. Well, we can start it even from higher. Doesn't really matter. We have a special. We have the divergence. Yeah, that's good. We are bouncing from the bottom of the channel, which is the third alternative spot of this channel. And now let's see if we have the false break and convergence. False break 1, false break 2. No real divergence here on the 1-hour chart, and not even on the 4-hour chart. No, nothing here to deal with the OZN. So far, nothing. I would say short-term pullbacks are acceptable, but we currently have no reasons. So the only thing in that situation that you can do is scalp the bounces. I don't do that, sorry. Scalp the bounce of this trend line. I myself don't do such things. So for me, it was and still remains sell rallies. Still nothing to do here. But here comes the pound versus the yen, which reached the 38.2 of the big cycle finally of these shorts. Final target is here, which is 146 zone. Okay, so basically for long term, still sell the rallies. Do we have any reasons for buys here? Let's have a look. I'm trying to understand. We have triple descending cycle. We have a false break here. And we have a false break here, which doesn't have the divergence in that place, which makes this high not valid. This is the high that we need to break. If we break this high, we can go and look for retraces to buy. We don't have it yet, therefore we don't have a buy yet. It's still bearish. Okay? Simple. Again, simple. To invalidate a possible tempting decision, you need to ask yourself the questions. Do you have the setups valid? If the answer is no, you have no reason to trade. Cat Frank, still nothing, guys. I know, and I saw many already eyeing on this one. We don't yet have a second false break. We don't even have higher highs. So Cat Frank, still nothing for the long term. And yes, I am following that big time for for the long term. Oil, special cycle, double bottom, bullish divergence. The 1-hour chart, false break. Well, we don't have this low, but we have it here, so this is where it comes tricky. Not clear in terms of the real lows. We do have the special cycle on the 4-hour. We do have the last leg a cycle on the on the 1-hour. We do have this on the intraday, and we have trendline breakouts and higher highs. So for the short-term oil, short-term, not long-term. Long-term is still bearish. Still, oil is acceptable for buys versus this low. This is the invalidation for the short-term buys. And the buys, first of all, I will be looking for this Fibonacci retraces as a target. So something to here. This is the invalidation for short-term buys. Long-term is still sell rallies. Nothing changed there for the long run. And we also have this trend line holding and bouncing, so that could be contributing for the short-term retrace. This is a bullish hidden divergence. That's all. Only short-term retraces are acceptable for oil. Gold and silver. Well, silver we already bullish from yesterday. Gold, this was the last trend line. Gold broke the trend line as well today, so they become bullish as well. That was the last trend line available for the gold. It's broken. Bullish it is. Natural gas still has nothing to do for us. And the indices approaching to the, well, the ideal place, I would say. We have a false break on the bottom. We might get it on the possible top of this range. In terms of the cycles, we have the 61.8 right there. You can of course measure it completely here. It's the same place. So this is what I want the Nasdaq. Of course, the divergence has to be there. Dow Jones basically the same. And the German DAX, that's the two waves I want to see. Ideally here, or even the 161.8. Ideally. Currently, we are on critical place, and it does start to develop this possible trend line. Again, ideally, I want to see that higher, the 100 or the 161.8. Why? Because this would be the Fibonacci retracement of this special cycle, right here, or slightly higher. That's the ideal places where I want it to start going for the long-term sales. Currently, no long-term sales activated yet, not even short-term. And of course, the cryptos. Well, the Litecoin, with all the things happening there, with the fork coming for Litecoin Cash, boost up. Our plan still the same. We are bullish since here. We keep it bullish. First target is the triple cycle of the daily chart, which means 50%, which is 240 zone approximately for the Litecoin. Litecoin versus the Bitcoin, we are bullish with this double cycle. You remember that, right? We got this double cycle, and on the lower time frames this double cycle. So from the breakout, we are bullish here. And this one, I think we are going there for the long-term buys, because I do think Litecoin is going to be much more interesting in terms of solutions than the Bitcoin. I might be wrong. That's my view. And the rest, well, they remain bullish. Nothing changed. Every two waves down, we are after buys. The current one that is running is this. For the Ripple, that was the stop loss right here. The last two candles rule in play. The Ethereum is bullish. And the last one is running is basically right here. Nothing since then. On the 1 hour chart, and all of them. IOTA, you know my view. I'm ultra bullish there for the long run. I think they have all the reasons to gain some crazy activity later on. ETP, of course, well, one of my favorites for the long term. As long as we hold the divergence and the lows, only buys, and that means two waves retraces. Buy. This is the last one currently running. Okay, at this stage, that's all. So no change in our view for the cryptos. They were bullish for us in the last couple of weeks. They remain bullish for us on the current period being. New Zealand and Canadian. Well, this one we are approaching the sell zone. The closer we get to 0.93, the better the sell should be. And that's basically all. We have it here. 0.93. The triple was over this place. Also 0.93. The closer we can get to 0.93, the better the sell would be. Currently, we have no sells. No false breaks, no convergence, nothing. So It's still bullish on the short term. For the long term, definitely we are approaching to monster level to go for sales. Not there yet. Not there yet. Bottom line, guys, you can see that many pairs are zigzagging. The news say one thing, the reality says the other things. What does it mean? These pairs, be very careful with them. Go with the ones that are much clearer. The euro pound is much clearer. The silver and the gold are much clearer. The cryptos are much clearer. The euro CAD is still clear enough, but we want a clearer setup, but the direction is clear. Okay, the euro Aussie was perfect. Now it's time to move it to neutral. Go with the ones that are, well, they don't give you the doubts. That's the bottom line, and follow them. Okay, so that's all for today. Don't let the market, and that's what I always say, don't let the market fool you with setups. Always ask yourself the question, are the setups valid? It's easy to answer them because the rules are the same. The two candles rule must be there, the divergence must be there, the breakout must be there. It has to be clear. If it's not clear, it's simply not. At the moment you start to force it and bend the rules a bit and try to convince yourself that something is good, that's exactly the place where it starts to be not good. And if you have any question about anything, ask in the groups. That's why we have the Telegram groups. Share. Don't deal with yourself. Don't get doubts with yourself. Yes, no, maybe yes. Ask. You don't ask, you don't know the real answers. That's why we have these places for you guys. Okay? So you don't waste your time trying to understand what's right, what's not. Okay? Thank you very much for being here. I wish you a wonderful day. Stay safe in that kind of moves on many pairs, and go with the clear ones. Remember that. Go with the clear ones. I'll see you tomorrow. And thank you very much for being here, guys. Bye for now.